Another transaction we need to know how to deal with the identified cost method is how to record drawings. So just a quick recap, what's the identified cost method? It is where each unit of inventory is physically marked, for example with a sticker, so it can be individually identified when a transaction occurs. So here's the rules we need to know. We need to know how to treat all these transactions. We've done a sale and we did returns. So now we're up to this one. Drawings. How are we going to deal with drawings? Well, what are drawings? Because they are separate entities, the business and the owner can engage in transactions with each other. So we've got the entity here as an owner, and the business here as an entity as well. And they're not the same thing. And what that means is the owner can take out the assets of the business. So for example, money, a car, a property, and we would call that drawings. That's when the owner takes assets from the business. They are withdrawing their equity from the business. And another asset they can take out is inventory, just like they can take out money or a car. So how do we deal with that under the identified cost method? And the rule is this: for drawings of inventory, the actual unit is identified. So let's do an example. Let's work our way through. It's the same example we've been using. We're just going to deal it with drawings, and we'll start with May the 3rd, purchased 5 units for $44 each, including GST. Paid with cash, receipt 504. So we do the date, May the 3rd. We write receipt 504. This is an in because we're buying inventory. And we get the GST out. We don't need GST in the inventory card. So 44 divided by 1.1, we get $40 each. We've got 5 chairs here. We're going to put pink stickers on them so we can identify them later. May the 5th, we sell 3 units for $100 each plus GST on invoice here. The inventory had pink stickers. It's also the only inventory we had, so that was easy. But yeah, this $100, we don't need that. That's what's called the sale amount. We are dealing with the cost amount in the inventory card, so we don't need that. We need the $40 or the cost price. So we do May the 5th. Invoice here. It's a sale, so that's an out. So 3 units at $40 is $120, and that leaves us with 2 at $40 for a total of $80, and here they are here. We decided to buy more on the 11th. Credit purchase of 3 chairs for $50 each plus GST on invoice. Date, invoice, 3 at $50 for $150. And because these are a different amount to the existing ones, which are $40, we're going to put a different coloured sticker on. We're going to put yellow stickers on these ones. So we've now got 2 at $40 for a total of $80 here, and 3 at $50 for $150 here. Then we sold 2 units for $110, including GST. Again, we don't need the sale amount. We can ignore that, it's just to confuse us. One chair had a pink sticker, the other a yellow sticker. So this is going to be an out, May the 14th, invoice number. 1 out, 1 pink chair, the other out, one yellow chair. So that will leave us with 1 pink chair at $40 here, and 2 yellow chairs at $50 each there. And then what happens is the owner withdrew 1 unit of inventory. But I really can't tell, and there's the memo number. We've got to identify the actual unit. I can't do that because at the moment, if you look at this inventory card, there's 1 pink chair, 2 yellow chairs. So I could not answer that question. So the question would have to give you some sort of information to help you identify which chair. So let's add that in and say the unit that the owner took had a yellow sticker. So it's got to be one of these ones. So the owner is actually going to take, so we do the date, May 15th, the memo number. We've got 1 unit at $50. The owner took 1 with a yellow sticker. So now what we're left with is 1 unit at $40 here, a pink one, and 1 yellow stickered chair at $50 there. And why we're doing this is so that we can do a general journal entry. Here's the transaction that we just did. General journal, we've got drawings. It will always be a debit because it's a negative owner's equity. What's the amount though? We can't tell from reading that. It just says the owner took 1 unit with a yellow sticker. And that's the point of this inventory card, because now we can go, it says memo 5. Let's match up memo 5 here. It says that's $50. So we're going to do $50 there. And it's an out, so outs make inventory go down. So that's $50 there. And that's how we deal with drawings under the identified cost method. So now we can add to our list of rules. So here's the rules we know. We already knew sales and returns. And now for drawings of inventory, we can add in and go, we're just going to identify the actual unit that was taken out by the owner.